Hey, this is Justin from Property Vine, and we sit down with Trey Reed from MVB Mortgage to talk about credit. Now, I've had terrible credit in my life, and I've also had good credit. In 2008, 2009, my credit was terrible. I lost a lot, and I never thought that I would own a home again. He talks to us deeply about credit, the fears, but also ways to fix it fast. Listen to this next 10 minutes. I look forward to seeing you on the inside. So credit, all right? So one of the things that I think that people struggle with is the idea that when you run my credit, it's something about me. You know, it's something that it's almost as if you're telling me I'm a bad person, right? You see all my dirty secrets on my credit report. I want to get this house for my family, and if you tell me no, then my dreams are dashed. I may just even be fearful to have you run my credit. I mean, have you seen that a lot?
I've definitely seen people that are afraid to just have their credit pulled. Sometimes you're right. It's because they might have something negative in their past that they don't want to either share with me, or they don't want to, think about those times. So yeah, absolutely. That has happened before.
Yeah. But how do you go about making people understand that it's not about judging them as a person? It's more about, what you can do to help that person.
So when you have someone that's got a negative, history, you just want to come across that you're trying to help them, which is exactly what I'm trying to do. They want to purchase a home, and credit is obviously a big piece of that. And if we don't pull that credit, or we don't face that fear that we're talking about, they're not going to be able to get into that home. So we've got to face those fears and find out exactly what we're dealing with so that we can overcome it and get them to where they want to be.
It's not about saying, hey, you're a bad person, right? It's about what we can do to get you over the hump. And sometimes, I know that you've helped me, and I've seen you help other people where, there's two things that I've seen. One is their credit isn't as bad as they think it is, right? They think they have to have a perfect score to buy a home, which is not true.
Not at all.
And the other thing is that there's some tricks, right, that the loan officers and mortgage brokers or mortgage bankers, the experts, they know some tricks on how to get your credit up really fast.
Absolutely.
Right. And I know that you've done some things. You've told me about some things. I've even applied them with my own credit and saw like a sharp jump. And so can you talk a little bit about some tricks that you've given your clients to kind of get a really dramatic increase in their credit rather quickly?
Absolutely. So I've got a perfect example that I just helped some customers use about 2 months ago, and they purchased their home in DC.
Hey, sorry to interrupt. I promise this will only take a few seconds. If this content is helpful to you, all I ask is that you share it with a friend, coworker, a family member. And if you live in Virginia, Maryland, or DC and are thinking about buying or selling a home, please give us a call. We'd love to help you. Okay, now back to our episode.
It was a young couple. The wife had great credit, but the husband didn't have such good credit. And it's not that he had something negative in his credit history. It was just a lack of history. And a lack of history is just as bad as negative history when it comes to credit. That's just how the algorithm works. So what we did was we were able to have him added as an authorized user to his wife's credit card. And when you do that, he inherits the positive history from that credit card, and it boosts his score. I think he was in the mid 600s, and it boosted all the way up to, I think, 740. And I think I was able to get them a interest rate that was 0.25% better. And that's a change that can be done within 30 days.
All right, so is there a loophole? Like, can I go to all my friends who got great credit and say, hey, add me to that credit card, add me to that credit card, and I've got 10 different people, and I'm leveraging all their credit lines. Can I do something like that?
I actually believe, and I've seen it, there is a website that you can go to, and you can people will charge you to be added as an authorized user. I don't know what the website is. I've seen it myself. People charge $700, $800.
Was it like borrowmycredit.com?
We could find it quickly. I don't know what it is, but it exists. I've seen it where, if you've got great history, you can charge people to be an authorized user on a credit card to boost their score. Right. And honestly, it's probably one of the best $700 or $800 you could spend if it's going to save you thousands of dollars over the life of the loan.
But have integrity about this, folks. Like,
right. I'm not encouraging that. But I'm just saying that there is things that like that are out there. So yeah, that's the best tip, is just be added, whether it's a parent, a friend, a significant other, be added as an authorized user to that card, and you're going to inherit that history, and it has no negative impact on the person that's sharing.
Okay. So one hack is you can actually jump on the credit of someone else's by having them add you as an authorized user to credit accounts that they've got.
Mm-hmm.
So that's one way to boost my credit.
Mm-hmm.
So the next question that I would have then is, if my wife were to add me on her credit and boost up my score, but you run our credit and see that we both got that same credit line on our credit, that doesn't impact it. They don't say, let me count this towards this person, not the other, or I see what they did here.
So for that, not at all.
Okay.
The credit score itself is supposed to take all that into consideration.
Okay.
So if you got a 740 score or 700 score, whatever it is, that's the score that we use. We don't dig deep into find out how it got there.
So another question I have then is now, when I was doing loans many moons ago, one thing that we used to do is tell people to keep their credit balances to about 30% of the credit limit. Somewhere in there, maybe like a third. Like if it's like right around 1/3 of your credit limit. So if you've got, $1,000 credit limit on this credit card, don't have more than $300 or $333, right, on that credit, on that credit card. Does that still hold true today?
That's definitely true. Yeah, it's called the utilization percentage. So the lower, and it's at certain echelons, so certain percentage of that card. So I like your example of 1,000 just because it's easy for math.
Right.
I think having it under 30%, I don't believe it's 33. I think it actually is 30%.
30%
is going to get you the best credit score. And it may even be better if you get under 20 and under 10.
Right.
But once you go over 50%, that's where it's going to start negatively impacting your credit.
So the 30% rule still works.
Still true. And when it comes to that, the big mistake that I see people make is, let's say they've got 3 credit cards, each with $1,000 credit limit. They won't use 2 of the credit cards, so those balances are 0, but they'll have a $800 balance on the other one.
Right.
The credit score you would get for having that scenario is worse than if you just had $250 on every single credit card.
Oh, wow.
Because now you've got 3 under 30% opposed to 1 at 80% and 2 at 0. Because that 1 at 80% is going to ding your score. If you were in that scenario and you just spread out the debt over those 3 cards, you're going to see a boost.
Okay. So another great credit hack or way to prepare for a mortgage would be look at your credit accounts and see if you can get the average balance on each of your credit accounts to roughly 30% of the balance.
That's going to give you the best chance of getting a good score.
Yeah, and about 30 days or so, you can see that actually impact your credit score, or how long does it take roughly?
It's whenever that credit card reports to the bureaus, which is typically once a month, usually at the end of the month. So if you're in the middle of the month doing this, it could just be a couple weeks.
Now, another tactic. So let's go to tactic number 3 that I've seen work and that I've seen you have other folks do is write letters to the credit bureaus. Because, and at least what I recall was you have this thing, the FCRA, the Fair Credit Reporting Act. And it said that, credit agencies had a certain amount of time in order to respond to a dispute. And so I know a lot of these credit repair companies, that's sort of the tactic that they take. They just sort of barrage,
that's exactly what it is.
These credit companies with letters. And it's really simple to just write a letter instead of spending $1,500 to a credit repair agency on your own. And if they don't respond within a certain amount of time, the credit bureaus have to return it. Does that still exist today?
That does exist. Now, I am not a credit repair expert. I am good with credit, but I am not a licensed expert. I usually refer that out to some experts that I know, though. But to what I understand, yes, they write the letters, and the creditor's got a certain amount of time to reply. And if they don't, then the collection, or whatever it may be, has to be removed. So if you talk to a credit repair expert, the first thing they're going to say is do not pay the collection, because once you've paid the collection, there's no going back. You're basically admitting fault at that point. So don't pay the collection, and then work with a credit repair company, and they're likely going to be sending letters on your behalf. And as soon as they don't respond, that's where they're going to. That's how they're going to get that collection removed, or that negative item removed.
Yeah, I mean, I can tell you, as throughout my life, I've had ups and downs of credit. Now's a good phase, and I kind of have to attest, give that to my wife, right? She helped me repair my credit. So wives are good, right?
There you go. There you go.
But before that, I had terrible credit, and I was in a position, I was a single dad at the time, I was divorced, and had my 2 daughters, and I just really wanted to buy a home, and I just felt like I couldn't, I was scared. And if I were to go to a loan officer and have him run my credit, I would have probably almost vomited right there on the credit report. You know what I mean?
Right.
And even having a background in loans, I had been a loan officer before. I knew all this stuff, just didn't do it, until I finally just, gave up and said, you know what? I need to get my head out of the sand. I need to figure this out and fix this. My wife helped me too. And then what I found was when we met you and I bought my house, that was the first time I bought a house. Now, here's a guy who had bought probably hundreds of homes in my prior life as a real estate investor. A guy who has been part of 1,000+ deals in my lifetime, but reached a period in my life where, through divorce and through the whole 2008 2009 fiasco, I just sort of let some things go away. Now I focused on my children and getting through that period of my life, but then had reached this just state of fear. Like I felt like I just couldn't move forward, and then met you, and you helped me buy a home again. You helped me kind of get back into home ownership. I don't know if you know this.
I didn't know.
I never told you
this. This is. I like hearing this though.
Yeah, I mean, and this is true. This is not for video, right?
Yeah.
And so some of these strategies, because when I came to you, my score wasn't great. I think it was maybe like low 600s, right?
Sounds right.
And then we did some things, and now I'm like, mid to high 700s, right?
That's amazing.
And we did some things, some strategies that you taught us, some things that I knew from the old days that I was able to apply. Basically, the things that we just talked about. But all that to say, man, number one, thank you for getting me back into home ownership. The guy who even had all this experience, and I say that because there are people out there who maybe have never even bought a home, and they're fearful. And I'm telling you, as a guy who has bought hundreds of homes and been part of thousands of deals, sometimes you get fearful, right, of buying a home. But meeting a guy like you, understanding that there's a human side to this, not just numbers, right, and that it's designed to help people to get better. So I just want to encourage people to just get in the process, right?
Absolutely. I mean, just fear of credit is something that you need to address. If you just don't do anything, nothing's going to change.
Right.
Nothing's going to change. So figure out what it is that's causing the problem, address it, and talk to a professional that can help you, and it can be done.
Right.
I've seen people go from 500s to 700s, and it can change their life. It can get them from renting in a family in an apartment to be able to buy that house, and it can really, really do some good.
So now in terms of just actual mortgages that I can get, so what are some of the mortgage options that people have at the different credit levels? Say I'm in a high 500s or 500 level. I'm in a 600 credit score, mid 600s or whatever.
Sure.
And then I'm 700. Like, what are the options that people have?
So let's just start from the bottom. So the lowest credit score I believe you can have to get a loan, at least a standard type of loan. There's other types of loans where you're putting a large amount down and paying a ton of fees, and maybe they don't even run your credit. But I don't necessarily recommend those types of loans. Right. But in general, if you wanted to get a VA loan, so a veterans loan, or an FHA loan, which is the Federal Housing Administration, both of those are government-backed loans, 500 is the lowest credit score that you can have. Now, my company, the lowest we can lend on is 580.
Okay.
So those are really going to be your only two options, is those government-backed loans, VA for the military, FHA, and then also USDA. And we can talk about those loans later. That's going to be your only options when you're under 600.
Right.
And then once you get above the 600, it can depend on your down payment to what's best.
Right.
The best type of financing is conventional financing. That's where it's backed by Fannie Mae and Freddie Mac. And in order for those loans to make sense, you really want to be in the 700s. And the deeper into the 700s you go, the better the terms are going to be.
But if my scores are in the 500s, and tell me if this is true, sometimes the folks who have scores in the 500s are the easiest to get into the 600s. There's some things that you can probably do that have such an immediate impact to their credit score. Obviously, if you're already in 700s, you're just kind of doing some tweaks.
Right.
But what I've seen in the past is, folks who have that lower credit, if you actually come to a professional like Trey, or professionals that you're actually recommending, you can have really quick impacts on the lower credit scores, because it's usually just something that they're not doing that they just don't know. It's just a quick education thing.
Absolutely.
I mean, would you say that's true in general?
It depends. I mean, you've got some people that have, bankruptcies and foreclosures and whatnot, and those aren't quick fixes.
Right.
Those aren't. There's waiting periods and that you've got to deal with. But then you do have a lot of people that just have a collection or two sitting on their credit report that they can have fallen off just by working with the right professionals. Where
writing
you can see,
letters and all that
the
stuff.
letters like we talked about, or the utilization percentages on the credit cards. So yeah, those can be quick fixes that can take you from even going from $599 to $600. It's a big difference. I mean, it's only 1 point, so it seems small, but in the mortgage world, that 1 point can be huge.
Right. So you talked about bankruptcy. What mortgage options, if I've had a bankruptcy in my past, what mortgage options do I have? Is it still roughly 2 years that you've got to wait, or can people actually have a year of season? I think the term is seasoning.
Seasoning, yeah. So yeah, there's seasoning requirements, which is the period that you have to, the time period that you have to wait. So when it comes to bankruptcies actually aren't as bad as most people think.
Right.
Foreclosures would be worse, but bankruptcies, yeah, it's a 2-year waiting period. Some other loans can be 3 or 4 years. But yeah, it can just be a couple of years, and you can get the best type of financing that's out there. You can get that conventional financing that most people want. Now there are alternative options where you can get a loan, get a mortgage, even the next day after.
Wow.
We actually have some loan products where they're FHA loans, and you could declare bankruptcy today, and we could pre-approve you.
For a loan tomorrow.
Now, the interest rates are higher, and you're going to pay more fees up front, which makes sense. But if you're someone that needs to buy, and that's what you want to do, it can be done.
Right. And so in that case, we would probably do some sort of math to figure out if the fees that I'm paying for a loan like that, when I'm in my bankruptcy, is the tax advantage that I get greater than the cost of jumping into a loan like that?
You're exactly right.
When you guys do that type of math for folks to figure it out?
Yeah, absolutely. I mean, if the interest rate's 7 or 8%, should you just go rent and wait your 2 years and then come back and work on your credit? It just depends. You want to weigh your options. What's the opportunity cost?
Right. And if not, then here's a strategy for the next year to 2 years to kind of get you to where you need to be so that you can jump into that house that you really want, get the rate that you deserm.
Absolutely.
Right. Yeah. I mean, that's awesome, man. I know that there's a lot of folks out there who've had bankruptcies. And are probably, that's another fear, right? And that's kind of where, I personally have never had a bankruptcy, but I have had really low credit. You know what I mean? So I understand what that fear is like, totally.
Yep.
Yeah. But that's awesome, man. Well, I really appreciate it. I mean, I think we're towards the end of our 10 minutes here, but we wanted to give people just a general idea of, hey, don't be scared if credit is a fear, that there are plenty of options. MVB Mortgage in particular has lots of options. Trey in particular has helped me personally, and I shared my story. So hopefully people won't be scared and kind of want to jump into home ownership.
I completely agree. Yeah, don't be afraid to face those fears, because if you're working with someone that's trying to help you, you're only going to improve your situation. And there's great options for you, whether you're at 600, 700, even in the 500s. There's great options out there for almost anybody. Yeah.
Well, Trey, this was really valuable information. Thank you for telling the audience this, the people who are listening to this. I'm sure you've helped some people. Hopefully this information will really help some people and get them to act, whether they call us or not. Listen to what Trey has said, what we talked about, apply it to your life, get that home and that mortgage that you deserve. So thanks a lot for coming today,
Thanks,
Trey.
Justin.
Yeah.